Hello, all you lovely people out there. How are you doing? I'm Kate Hill, and I am here to give you the best unbiased, honest commentary about the property markets, along with fantastic and awesome hints and tips. Check out the other videos. But for now, stay tuned for all your latest property news. More shameless self-promotion, guys. Before we get going, very quick heads up on the new book that I've got coming out. It's a must read for anyone who knows a lady keen to turbocharge her financial future. This is a property investing book that tells you not just that you should do it, but how you should do it. The link to pre-order is in the description below. And before all you lovely fellas out there get outraged or feel left out, please know that this is genuinely a really serious issue. There are a lot of women out there who actually need this help. So be nice, please. And while we're at it, please subscribe to the channel. I don't buy subscribers like a lot of other channels do, so it does mean a lot to me. Okay, getting on with it, Case. Finishing up on last year. National Australian housing values were up 1% higher in December. CoreLogic figures show that growth is slowing from a 1.3% rise in November, continuing the softening trend in the monthly growth rate that has been evident in the national index as it moved through a cyclical high of 2.8% growth in March 2021. As dwelling value appreciation slows, conditions are becoming more diverse among the capital cities and regional areas of Australia, and dare I say it, a bit more what we will call normal. Brisbane and Adelaide, along with regional Queensland, are the only broader regions where there is no evidence of value growth slowing just yet, with the monthly rate of growth reaching a new cyclical high in December. CoreLogic's research director has said that these regions show less of an affordability challenge relative to the larger capitals, as well as better support for housing demand, with Queensland in particular showing strong interstate migration. Additionally, we haven't seen the same level of supply response seen in the other regions, with the trend in advertised supply remaining well below average in these markets. On the other end of the spectrum, momentum has slowed quite sharply in Melbourne and Sydney dwelling markets, with both cities recording the softest monthly reading since October 2020. We saw an increase in freshly advertised listings through December, which has also been a key factor in taking some of the heat out of that Melbourne and Sydney housing market, along with some demand headwinds caused by really significant affordability constraints and negative interstate migration, and of course Christmas looming in December. We were all a bit over it at the end of last year, weren't we? Regional Australian housing values have seen some renewed momentum, with a monthly rise of 2.2%, which is the highest in 9 months. Regional Queensland was the clear standout across the rest of the state markets in December, with housing values up 2.4%. However, over the year, the strongest regional markets have been New South Wales and Tasmania, both at nearly 30%. The most popular regional markets have seen housing values rise more than 30% over the calendar year, with the Southern Highlands of New South Wales, Shoalhaven recording the highest annual rise in home values at 37.7%. followed by Queensland's Sunshine Coast at 33.7%. After leading the upswing, it is clear the upper quartile of the housing market is now leading the slowdown. Across the combined capitals, upper quartile dwelling values were up 2.6% in the December quarter, compared with 3.7% rise across the lower quartile, with a broad middle of the market. National dwelling rents increased by 9.4% over the 2021 calendar year. Unit rents were up 7.5% over the year, compared with the 10.1% lift recorded in housing rents. Rental growth trends across the unit sector have generally been milder than houses, with unit rentals being disproportionately affected by stalled overseas migration, as well as domestic rental preferences shifting away from the higher density options through the pandemic. However, these trends are starting to change as rental affordability diverts demand back towards the unit sector. In Melbourne, where unit rents fell by 8.5% between March 2020 and May 2021, many landlords will now be delighted to hear that higher density rental markets are now recording a faster rate of growth than houses, with Melbourne unit rents recording a 1.6% quarterly increase compared to the 0.9% rise seen in the housing rents. The highest capital city rental market over the year has been Darwin, where dwelling rents rose 15%. Conditions have eased a little over the second half of the year, with annual rental growth moving through the peak of 22% over the 12 months ending August. Although rents have surged across the northernmost capital, Darwin's rental index remains at 7.6% below its 2014 peak, a legacy of that decline in rents recorded back in 2014 to sort of 2019. With national housing values recording that massive annual rise compared with the slightly lower rise in rents, rental yields, of course, decreased. It's a natural consequence. Gross rental yields fell to a new record low across Australia, reaching 3.2% in December. The lowest yields by some margin remain in Sydney at 2.4%, then Melbourne 2.7%. However, with the exception of Perth and Darwin, every capital city is recording new low yields. The Australian Bureau of Statistics Head of Finance and Wealth has said that residential property prices increased by 5% during the last quarter. This means that household wealth in Australia increased over the quarter to hit a record of nearly 14 billion, according to the ABS data. Wealth per capita also rose to hit a record high, with residential property assets contributing to the growth, of course. Increases in super balances and currency and deposits also helped improve household wealth. Lockdown restrictions in New South Wales, Victoria and the ACT reduced auction volumes, as we all know, property listings in those markets. The ABS also say that, however, property prices continue to grow strongly. They say that government support during the pandemic has also helped increase household disposable income. At the time that household spending dropped, particularly in New South Wales, Victoria and the ACT, as those cities experienced prolonged periods of endless lockdown restrictions. Now, we will keep you posted. I'm going to keep talking to you about all things property from around Australia as our new year progresses. Don't forget to hit the subscribe button if you are enjoying the free content, and I will see you again really soon. Bye.